Good morning and welcome back to Almus Market Mornings. US and Iran are set to resume ceasefire talks in Pakistan again this week after the previous round failed to yield any agreement, while the blockade announced by President Trump over the weekend continues to disrupt shipping flows. And on the data front, headline inflation came in higher than February but below expectations, while core inflation softened compared to last month, supporting gradual weakening in the dollar. And domestically, once the April 10th deadline for the banks to unwind their long positions passed, USD INR jumped back above 93 on Monday. Good morning, Jayaram sir. With yet another talks of rounds lined up after the earlier disappointment, are you keeping any positive expectations from this one?
Morning, Ishan. So I think this, whatever we are hearing, quite mixed actually, but although markets have been more leaning on the optimistic side, as you said, it's a good news to see resumption of talks between US and Iran on Thursday. Yeah, again, it's going to be a personal meeting in Pakistan. So markets have taken it very positively. Oil has fallen and risk assets have rallied. Dollar has fallen as well. However, there are some things we should keep tab of. Although the first day of the U.S. blockade on vessels, calling it Iranian ports, made little difference to the Strait of Hormuz traffic on Tuesday. At least 8 ships, including 3 Iran-linked tankers, crossed the waterway. Uh, Broadly, the traffic has not stopped. Both the sanctioned and non-sanctioned vessels continue to transit, though the flows are thinner and behavior is quite linear. Now, the blockade therefore appears to be targeted and intelligence-driven rather than a full closure. Now, the attention is actually shifting to the Bob al Mandeb, where the escalation risks are rising and disruption could be materially affecting the Red Sea export routes and increased pressure on global oil logistics. So, in fact, Saudi Arabia has, warned the US to stop the blockade, as that might incite Iran to retaliate by closing the above, the sea route that I mentioned. A choke point for crucial for the Saudi Arabia's remaining oil exports. Although so far no reaction has been seen, it may even possible that Houthis might also get into the conflict. That is a fear that is being expressed. One good thing is that even though the talks on the weekend between Iran and the US stopped without any progress, since then we have not seen actually any major attack nor any major threats. So these, apart from the blockade that US has announced, which is also partially successful. So I think that's what the market is taking with both hands and reacting positively. In the meantime, even United Nations has announced that it is expecting the US-Iran talks to resume, and regional foreign ministers announced that they would convene in Turkey to generate proposal aimed at reopening the Hormuz Strait. Another positive development has been that European countries are putting together a plan for a broad coalition of countries to help free up the shipping route of Strait of Hormuz. And so that's again, this is what the Wall Street Journal has reported, and seems that there are concerted efforts now happening to free up the sea route, and that's a big relief for the oil market and oil importing countries. However, one should note that the oil prices will take a long time to come back to the pre-war levels, at least 2 to 3 months. Even if the sea route is opened tomorrow, the production facilities which are affected in the Middle East, as well as the accumulated ships passage through the sea route, all these things will keep the oil prices elevated for now. But market is hoping that we get more positive development from the talks which are lying ahead, as well as successful operation by other countries to get the Strait of Hormuz open. So we are opening once again the Asian markets with an optimistic note. At the same time, something very discomforting is the statement made by Treasury Secretary Besant, who said that the Donald Trump's tariff might be restored by July to the levels in place before the Supreme Court struck down his levies. So he said that they will be implementing or conducting Section 301 studies so that tariffs could be back in the place at the previous levels by the beginning of July. So markets again going to keep tab on developments in this regard. Now, all said, we had seen the dollar index extend its slide for the seventh day in running. This is the longest run of fall since July 2020, as broad dollar selling has persisted. It has been, across the currencies. It's a secular fall in the dollar that we have seen. Also, a fall has not been very sizable, but it's a gradual and steady fall that we have seen. And there is sentiment also substantially improved. In fact, the S&P 500 in US has almost just 2% away from the all-time high that it has hit before the war. Yields have also dropped on oil prices coming off. Then, of course, we had the PPI inflation from US yesterday. It came lower than expected. In fact, the headline inflation was somewhat on the lines of expectation, but the core inflation was much lower than expected. So that's an indication that there is no broad-based increase in inflation. So the Fed continues to be in a situation where it has to balance between whether the inflation is going to be more persistent and long-lasting, so that they will have to respond to monetary policy, or if it is going to be transitory. Particularly if the oil prices come off, then they could well be focusing on the growth aspect. Speaking of growth aspect, in fact, IMF has downgraded the global growth to 3.1% due to the effects of the war. And that also, although for US, they kept the growth rate slightly elevated at 2.6%. So we keep an eye on what is happening in these peace efforts, and that accordingly the market will be moving. As far as India is concerned, we did have the CPI inflation which you referred to, and we had inflation coming at 3.4% in March compared to 3.21 in February. Month on month was also slightly higher. The pleasing thing was that the core inflation, stripping out the volatile energy and food inflation, was steady at 3.3%. In fact, last month it was at 3.4%. So again, this shows that there is no broad-based inflationary buildup. Now, the headline inflation, of course, does not reflect the rising crude oil prices globally. As the retail prices have remained unchanged, government has decreased the excise duty to compensate the oil marketing companies. So this implies that the headline inflation remains temporarily suppressed, and future pass-through remains a key risk. All said, while we did have the rupee also react in the offshore market by coming off the highs of Monday at from 93.38 to around 93.0510 levels. Impact on the rupee, or the gains for the rupee, still seems to be limited, which is still taking cues from the oil prices, which remain above 90, and then of course the missing capital flows. That's the biggest challenge for India, because the capital flows have not been enough to make up for the current account deficit. FI flows were at record highs last year, and as well as in the last month, we had very chunky FI flows. We are yet to see the resumption of the flows, although many in the market are expecting that the correction in the valuations could bring them back again, but we are yet to see the evidence of it. So rupee, for the time being, I don't think, even if the dollar index falls further, rupee is not likely to make much gains. Maybe 92.80 at best, and 93.50, of course, on the higher side, could be a resistance. In fact, on Monday we had seen PSU banks coming in selling at higher levels. So now the episode of banks having to sell their excess long positions, that's over now. So the supply demand situation is back to what it was before the war. Any gaps will need to be filled by RBI supplies, and demand, of course, is going to be quite persistent at lower level unless we have a big breakthrough in the war situation. Thank you.
Thank you, Jayaram, sir. And just to summarize, the markets are leaning to more of an optimistic side with these peace talks as we have the personal meeting in Pakistan, and oil has fallen and dollar has fallen for the same. And traffic doesn't seem to have fully stopped in the Strait of Hormuz after Trump's statements, but definitely thinned up, making it a partially successful by Trump, but no attack or threat from either side. Since the failed talks happened last weekend between the two parties. And oil prices may take a long time to come back to the pre-war levels, as there are many factors keeping it on the elevated levels. So for let's say 2 to 3 months, but tariff talks are back in town after Secretary Bessent mentioned in his recent speech that Trump may get back the tariffs to the levels before the Supreme Court ruling. And core PPI inflation number came lower than expected, showing no broad-based increase in inflation, keeping the Fed in question as to whether the monetary policy is to be a rate hike, and also keeping a close eye on the following month's inflation data. And when it comes to USD INR, INR gained from Monday's highs of 93.30 40 levels to 93.05, but still seems to be limited due to the continuing lack of capital flows. So we can maybe see 90 to 80 at best on the lower side, while keeping a watch on 93.50 on the upside being the key level. Thank you all so much for listening, and we'll catch up tomorrow with a fresh round of updates. Thank you.